Hello, everyone, and thank you for joining me today. This session is called How to Invest in the Future of AI. My name is Sean McMahon, and I'm SmartBrief's Director of Content for Financial Services, Energy, and Infrastructure. Today, I'm joined by Andrew Choi. Andrew is a portfolio manager at Parnassus Investments. Andrew, how you doing today?
Doing great. Happy to be here.
So tell our audience a little bit more about what you do at Parnassus.
Sure. I'm a portfolio manager at Parnassus. I'm on the portfolio management team for our core equity strategy, which is a large cap sort of blend strategy. And I also am a portfolio manager on our growth equity strategy, which is a large cap growth strategy. Primarily, U.S. focused, 40 stocks per strategy, low turnover, high conviction, sort of concentrated portfolios.
Okay, well, that's good to know. So, obviously, we're here to talk about AI. And AI has been in the news everywhere. Every company seems to be talking about it. So, for someone in your position, how do you think about investing in AI, whether it be directly or indirectly?
We've been following developments in artificial intelligence for quite some time now, and I think most of your viewers and all of us are pretty familiar with traditional applications of artificial intelligence, and these are Google search, recommendation engines on Netflix, things like that. What happened this year, as many are aware, that kind of changed things pretty dramatically is we've moved into sort of broader adoption of what everyone's calling generative AI. And this is when you have artificial intelligence models actually creating new output that's novel versus recommending things amongst existing information. And that's led to a kind of an arms race and sort of I would almost characterize it as like an utter enterprise panic towards investing in artificial intelligence, and that's kind of dramatically impacted the stock market, the narrative sentiment, and also if you look at businesses like Nvidia, which sells pretty critical components to train artificial intelligence models, right? Like the market has caught on and reacted. So we've been following that trend, and as we think about generative AI and moving forward from artificial intelligence, I mean, we at this point we really think about it as a sustaining innovation more so than a disruptive innovation. And what I mean by that is, given the barriers to entry of actually training your own model, deploying it across a large customer base, it's very expensive. And so this favors, in most markets, a lot of incumbents or a lot of scaled incumbents, right? So, we think that a lot of the profit pools that'll come from monetizing this new technology will go to businesses that are entrenched and already have pretty big competitive advantages, right? So these are your large, sort of mega cap tech companies, and your large scaled software players that already have really sticky relationships with customers, and that's kind of how we think about things. And as we've progressed through the year, and you mentioned, as a stock picker, how do you think about investing directly or indirectly? And where we tend to focus is areas which benefits or threats are sort of underappreciated. And I think earlier in the year, there was broad recognition that semiconductor providers would benefit significantly from the trend, but it was a little less appreciated where certain software companies would fall out in this. So when you have a large incumbent with competitive advantages and a wide moat, debate over whether this artificial intelligence would be beneficial or not to the business going forward, that's where we spent our time and have positioned around that. So if you look at our portfolios, companies like Salesforce, which is a customer relationship management software provider, companies like Adobe, which is a design software provider. I mean, these were kind of the archetypes of things that we looked for, that we thought would significantly benefit from this type of technology. So we kind of placed it into, just to summarize, we put it into historical context. We've kind of analyzed the fact that this is not a disruptive technology in the sense that it would change business models and completely disrupt the existing business dynamics. So it's a sustaining innovation. And what that basically means is it just, you go back to basics of competitive advantage and look at kind of businesses that have high switching costs, and barriers to entry, and it just puts more pressure on that. So we kind of it went back to first principles on that, and kind of positioned in that way relative to AI.
All right. Now, obviously, you mentioned a lot of big companies, Adobe, Salesforce, Nvidia, but obviously, there's also a lot of smaller players entering this market. So, how do you categorize the investments the team makes at Parnassus? Is it kind of big, small, startup, and established, or what does that look like?
So, in general, I think the opportunities are in like the larger companies. And, I think that there's obviously a ton of startup money going into the space. And outside of a handful of kind of large language model repositories or teams working on kind of different approaches to engineering different types of AI models, we think the vast majority of excess profit is going to accrue to kind of the larger cap companies, which is beneficial given the fact that that's where I spend and where we spend most of our time. But in terms of how to characterize it, I mean, we really see, if you look at the value chain, there's clearly the kind of the picks and shovel providers, which are, there's only a handful of companies that make the equipment to make the chips required to train models. There's only a handful of companies that actually create, design and sell the actual computer chips to train the models, right? So I'm sure everyone's heard of NVIDIA, AMD, Intel. And then, as you extend further down the value chain, right, there's basically owners of proprietary data that's very relevant for, generative AI. And I think, Salesforce is a great example. So here's a large company that serves, most of the Fortune 2000 globally, right? The Global 2000. And they, have long-standing relationships with their customers. So if you imagine, call it, one or two decades worth of all of the interactions you've ever had with your customers, in addition to all of the product information that you've ever created from a marketing and internal perspective, all of that is very proprietary, right, to that company. And Salesforce is actually able to train in a secure way on that data and actually make sales forces across the board more efficient. So things like that, maybe the less obvious beneficiaries like S&P Global, right, which is a financial data, it's a credit rating agency, but also they sell and own a lot of proprietary financial data, right? So these types of high signal, high value data providers are very well positioned in a world where that data will be the differentiator. And then lastly, any type of industry standard that's widely scaled and distributed. So Adobe is a great example, right? But there's a ton of other design software companies that are basic tools that high skilled labor is using to create things, right? And when you have a scaled, distributed industry standard such as that, the ability to deploy AI technology, right, especially generative AI technology, to improve workflows to make people more efficient is much easier. So I'd say picks and shovels, kind of like unique data owners, and then just scaled industry standard providers, right, who are closest to specialized labor, where you can actually deploy needle moving applications of AI. And the most obvious being in that former bucket is or the latter bucket is Microsoft with their Copilot product, which has dramatically improved the productivity of software developers, right? So instead of writing code in almost like an analog fashion, you now have an AI assist that can kind of speed up all the different types of like software development processes, and almost like kind of replace a team of sort of junior developers that might have helped you in the past. So,
okay, well, Andrew, I really appreciate your insights. It's great hearing from someone who's just really there, kind of like I said, processing a lot of information about AI. So thank you for your time. And to our audience, on behalf of SmartBrief and Parnassus Investments, thank you for joining us today.
Thanks for having me.